Hey, what's up guys? It's Corey here with Dapper Dollars. And today we're going to go over the Aemetis break-even report and what we can expect from this company in the future as far as where they're going for profitability and if this is even going to be possible for Aemetis. You ready? Let's get started. So this channel is all about using the online income opportunities like merch by Amazon and Etsy to build our income online and then invest this income in things like the stock market and real estate. If that sounds like something you're interested in, like and subscribe and let's get started. So this report came out on Yahoo Finance of analyst expectations of a potential break-even point for Aemetis in the future. But first, let's talk about what Aemetis is and what they're offering and why specifically this break-even point is even meaningful. So right now, Aemetis is a renewable natural gas company that comes in the form of biofuel and biodiesel that they make in India, dairy renewable natural gas, which they use the runoff from dairy farms, convert that to methane, and then natural gas, and that is used to power trucks and potentially power homes in the future. So it would have a negative carbon emission. They also have the jet fuel business that they're looking at in the future where they will take waste wood from California, which just like California has the highest dairy cow population, which helps in renewable natural gas production. California also has one of the highest numbers of almond orchards in the world. So with all these almond orchards being in California, and these orchards have to be burned at least once every 20 years, the waste wood is essentially burned and wasted, but now Aemetis has a way to convert this wood into jet fuel in the future, which would definitely help out their business. And also they have their hand sanitizer products that they make from ethanol, which is also used in the process of creating feedstock for the cows. If you have any other questions, I have done a bunch of videos that I'll link here, at least to one of my most recent, and I go over Aemetis a little bit more there. So that is essentially what Aemetis does, and whenever they talk about the break-even for Aemetis, what does this mean? This means that their revenue matches what their cost is, and if you know anything about Aemetis right now, their cost is through the roof, and since they're a startup, their revenue is down here. So right now, Aemetis is not exactly looking pretty as far as revenue or break even in the future, but the analyst expectations of this stock is very bullish. So let's get into what exactly they see Aemetis doing and really what they plan or what they see as a catalyst for Aemetis being break even or potentially profitable in the future. But right now we have to start by looking at where Aemetis is as far as their loss, because the loss for Aemetis is seeming to grow. Right now they are around a $40 million loss for the year, and before that they were at a $30-something million loss for for the calendar year. So from 2019 to 2020 they had a $30-something million loss, and from 2020 to 2021 they had a $30-something million loss. But now from their last report in the last 12 months, so the trailing loss that they have for 12 months is $40 million. So we see that, or is over $40 million. So we see that Aemetis' loss are growing, and this is not exactly great, and it means that Aemetis, already being a low revenue company, is going to have to work even harder to get to the point of break even in the future. But there are 5 analysts who go over the largest oil and gas companies who see Aemetis growing potentially 70-something% in the future year over year. And this is insane. It's great, and if you have followed Aemetis at all like I do, you know that this is potentially possible, that like we'll go over in the future, or we'll go over later in this video. However, from someone who has never heard of Aemetis before, to hear that a company growing over 70% year over year is going to, it doesn't sound real. Most companies are lucky if they get to 30% year over year growth, or 40% year over year growth. I mean, Tesla would love to have 20 to 30% year over year growth. But from what analysts say about Aemetis, it is not uncommon for a company like Aemetis, number one, being a startup, and number two, being in the oil and gas business, to have this kind of growth, especially in revenue, because the oil and gas production in the world is definitely an essential product, and the demand and lack of supply as far as what Aemetis is producing is going to drive their cost up as well, and the demand for the people as far as wanting to be consumers of this product and let people know that they are an environmentally friendly company using Aemetis' products in a negative carbon emission way is really going to drive the demand of this product up, because most companies want to be associated with being a negative carbon emission company. And with Aemetis' dairy renewable natural gas and their jet fuels and their biodiesel in India, this is all going to apply to these people and is going to help to get the world to a either carbon neutral or negative carbon standard. So with all of these things in play, it does kind of make sense in these analyst expectations to see that Aemetis could potentially reach a 70-something% year-over-year growth. But it is still a pretty amazing thing to think of, because it's not exactly something that Aemetis has proven so far. But we will talk about in a little bit in this video that Aemetis does have a pretty somewhat solid plan to get there. But we do need to address the negatives. Number one, we address the fact that their losses are growing. We also need to address that they are heavily leveraged and have a ton of debt on the balance sheet. And they also depend quite a bit on grants and government support for their production and their ability to keep going. Honestly, if it weren't for the government, the local government in California and the federal government of the US, Aemetis would have been out of business quite a long time ago. They are running extremely high on debt. Their assets aren't exactly meeting those levels of the debt. And their revenue, like we have said, is almost non-existent. They are getting some revenue from the biodiesel plants in India. They have some production coming from renewable natural gas in America. But right now, they have an expectation of 2025 being the year that they're going to have an exponential growth in revenue. But these analysts are saying that it is going to be 2022 when we can expect a break-even point for Aemetis. Now that is a pretty big claim, especially since they're going almost $40 million in a loss, or over $40 million in a loss year over year. That is going to be a pretty high bar to reach. But we're going to go over exactly what Aemetis can do and what they're planning to do in the future to make all of this happen. Because Aemetis, like we have talked about in the past, does have a plan. Their 2025 year plan to get to $1 billion in revenue is heavily reliant on everything that we have talked about already. So they have the dairy renewable natural gas, and the jet fuel is going to be the main drivers of revenue growth for Aemetis in the future. Right now, it is almost non-existent, but from what we can see on this chart, they are heavily relying on the dairy renewable natural gas to take off in 2020 to 2022 or 2023. And then in that same time, there will also be the beginning of production of jet fuel in the future. And with the combination of dairy renewable natural gas and the jet fuel production, by 2025, Aemetis is expecting to have over $1 billion in revenue. And this is all great, but from everything we have just said, remember, the analysts are expecting 2022 break even, but this is a 2025 year plan for Aemetis. So where does Aemetis see themselves at year 2022, where these analysts are saying they're going to break even? Well, from what we can see on this chart, again, the year 2022, $55 million in revenue is what Aemetis is expecting, again, coming mostly from dairy renewable natural gas. Now, this is a pretty big figure, especially for Aemetis, which is almost a really low revenue company right now. So, let's look at what their losses are and what they are going to need to make to actually be a break-even or potentially profitable company. So, with Aemetis' losses right now, we see that they have around $46 million in cost of production. So this means that their revenue is going to need to exceed $46 million in revenue to actually be break even or potentially profitable. But that also means that the cost of production is going to need to stay the same or only increase slightly in the next 2 years. So this is a pretty big bet for Aemetis, but it does seem possible as far as their projections. Everything that they have done has put them on the path to be where they are now. They are taking the correct steps to be there, or to meet these revenue expectations. However, if there is a slight misstep, this could all fall apart. It is essentially a house of cards. This is not a company at this point to bet the farm on. This is a company to bet maybe 10%, a little bit. And I mean, honestly, I don't have that much money invested in it. I started out with maybe $300 invested of a $12,000 portfolio. And then I've slowly increased this position to $4,000 just because, or $4,000 invested, just because I do believe in the value of this company. I do believe that they are going to make it. However, I do understand the risk at the same time. And this is my opinion on as far as where Aemetis is going in the future. I do believe that they are walking, and if not dancing, on a razor's edge right now. There is a lot of room for this company to go sideways, but there is a lot of room for this company to just explode and take off. So anyway, these analysts have a great expectation as far as, Aemetis making it to the year 2022 and breaking even, just like the revenue projection says. So if that actually happens and they're able to continue to be on track and on schedule with the building of their facilities, the production of their products, and being able to deliver on the promises, we are going to see Aemetis become a potentially $1 billion revenue company in the future. And this is, like I said, it's a bet. And I do think Aemetis has some pretty good odds. However, this is something that you need to yourself do the research on. I am not a financial advisor. This is just an entertainment channel where I talk about stocks. And you should consult a professional financial advisor before making any decisions about your money. So anyway, I hope you guys enjoyed this video. If you are invested in Aemetis and have an opinion on what they're doing right now, make sure to drop me a comment down below. Let me know what you think. And as always, I hope you guys are having a great day. Have a great rest of the week. And remember, someone is going to do something amazing every day, guys. Why not you? See ya.